Good morning, everyone. Good morning. Happy Wednesday. It's already Wednesday because, of course, yesterday, Monday, was a market. U.S. markets were closed. I should be specific. Let's see here. I think we are ready to go. Check one or two more things. Hopefully, the audio is coming through well. I think it is. Good. Okay, let's get started again. We're a couple of minutes late. Good morning, everybody. Happy Wednesday. This is our Set the Market morning call. I'm Serge Berger from thestudytrader.com. Thanks for being here. We are going to spend the next 10 or so, 15 minutes going through some of the things on my notepad. And in order to do that, I need to make sure that audio and visual is good. So thank you for participating in that. Where to begin? Well, first of all, if you are brand new, please make sure you subscribe to our channel and give us a thumbs up like. That would be very helpful. If you could do that. The benefit for you for subscribing to the channel, by the way, which is free, is so that you are updated in real time when we go live, when we have new research available, new market insights, and so on and so forth. So that's that. And also, if you give us a thumbs up, like, and engage, that allows the algorithms to pick up the show so that we are able to move up the ranks and hopefully grow the audience much further over time. So thank you all for being here. What I'd like to start off with today is I'd like to show you where we are seeing incrementally more buying happening in the market. And when I say market, in this case, we're looking at equities. Then what I'd like to do is I'd like to look at a little bit below the surface what we are seeing taking place in a little bit of weakness creeping in the tech space. Obviously, this morning notwithstanding, we have another big up gap in Google this morning after the court case yesterday. And so the algos like all that stuff. But that's all the more reason to talk about that. And then I want to talk about gold miners in gold and Alibaba. So we've got a whole bunch of things here to go through here over the next, let's say, 10, 12 or so minutes. Let's get started. First of all, if you look at the year to date, and just from an U.S. equity market sector perspective, this is the year to date performance, those squiggly lines. And you will see that the energy sector, the green line there, is roughly about middle of the pack. Up about 7% on the year. You can see communication stocks and industrials are leading, up almost 15-ish% each on the year. And then the laggards are basically consumer discretionary and healthcare stocks. I think the last one there not being such a great surprise to people on some of the laggards we've seen there. But the energy sector is right in the middle. What's interesting to me is that over the past 5 days, not 5 years, 5 days, we are seeing the energy sector start to pick up steam. So this is the performance of the energy sector over the past 5 days. And we've been talking to members about this. There's a bunch of individual stocks we've been highlighting with some specific levels. One of them being, for example, Valera Energy, ticker symbol VLO. What's really interesting about this, if we take a way step back and we make this a 5-year chart, you will notice that on a 5-year basis, the energy sector is actually outperforming all the other sectors too. So on a 5-year and on a 5-day basis, the energy sector is looking good. The trouble is that if you go back further, let's say 10 years, you will see that the energy sector is like almost buck naked last, right? And so we have this huge catch-up demand, and we're doing a special session today at 11 o'clock Eastern, so that's 8 a.m. Pacific time for those of you guys that want to join on in a really critical opportunity, we think, in the energy sector and other parts of that related market to be allocating portfolios to. So if you guys want to join that would be wonderful. We'd love to be able to have you there and welcome you there in that session. I'm going to see if I can drop a link for that session into the chat box. In fact, let me quickly do that right now. I think I just found it here. So here we go. I'm going to drop it in. So this is the energy. Okay, so just typed it in there like that. The next thing I want to talk about, so that's the 5-day gives us hope that we're starting to see more relative strength, and indeed our market rover is also showing us that. That's our trend following software. But let's see how this plays out. I wouldn't be surprised if we have a big catch-up trade into the end of the year here. So that's the energy sector. Now, before we look at gold and gold miners, I want to show you something that I'm watching very closely. And if you're a Trade Ops member, you know that we spent quite a bit of time on this yesterday in the members area. And that's this. I'm going to show this to you with shares of NVIDIA, which pre-market here are now flat for the most part after rallying into the overnight a little bit on the Google News. But one thing that we can watch underneath the surface, for those of you guys that want to watch the market a little bit intraday as well, is to see how stocks react on down gaps. So for example, NVIDIA, of course, being the most important stock from a weighting perspective for the US indices, you can see it's been gapping down now for 2 days in a row. So each one of these vertical dotted lines represents a new day. And you can see the sort of selling pressure that continued for the most part in both of those days. So this was last Friday, and then this over here was yesterday. I'm going to get rid of these arrows here in a second. But what I want to point out more importantly is we can judge how strong is the selling pressure intraday by seeing how the stock reacts after a potential attempt to fill the gap. Let me show you what that means. So this is what we did yesterday in Trade Ops in real time. We talked about the down gap in NVIDIA. Then we mentioned that there was an opportunity to trade for a partial gap fill. We did it in the NASDAQ 100 too. I'll show you that as well. But you'll notice that once, in this case, a bit more than half the gap filled, sellers came in and the market started going down. Then it rebounded towards the end of the day because why not, right? But the more we start to see these down gaps and then an attempt to fill the down gaps fail to fill, the more we can safely is a strong word, but the more we can presume that there is selling pressure in the market that could get worse over the course of, say, a number of weeks now in September and heading into October. So I'm watching this very closely. Again, we did it also in the NASDAQ 100 yesterday, and we talked about there might be sort of an upside profit target around 266. After that initial down gap, we got to 256.70, so close enough, I guess, for government work. But we had a gap attempt fill, which we have our 10-minute rule, and then we had the gap not fill, right? So you can see most of the gap yesterday in the NASDAQ 100 didn't fill. This morning we might start to fill some of it, but most of the gap did not fill, right? And so the more we start to see that going forward, I think the more we will have potential selling pressure come into the market. So that's something we're watching very closely. We will be looking at that as well today. For those people that are joining us in Trade-a-thon, which starts in about half an hour, we will be covering that as well. Tim is asking, how do you join Trade-a-thon? If you've purchased the ticket, then you should have received an email with a link to the webinar. If you did not, Tim, please reach out to support or let's see here. Joel, if you can see Tim, maybe you guys can link up and you can give him a ring or something to make sure he knows how to log in, assuming he's purchased a ticket, of course. That'd be the precursor to making that work. But Tim, you're in good hands, my man. Our team is here to help you out. So that starts in half an hour. But let's get on to one more point I want to make. It's a pretty big one, and that's gold and gold mining stocks. And I made a bit of a video this morning on this as well for our clients, and I wanted to just show you how gold is seemingly on once again a fresh tear, and so here is what that looks like. So here is the breakout that we have seen in gold, and what you can see is the breakout that took place yesterday after essentially a 5-month sideways movement, right? So after 5 months of going sideways, gold is now finally breaking out. I personally, in my personal account, I remain long gold. I've clipped it by 2/3 in like May or late May or whatever that was, but I remain long. I haven't yet added to it. I want to kind of see how the first of the month here kind of shakes out. But we do also have gold miners, and we're sending out a note to clients this morning on this as well, because gold mining stocks, if you look at them in a long enough chart, so if you take the GDX ETF, for example, and you peel back the chart, we're coming back to a pretty critical level here in gold mining stocks, back to about $66. And I think this is probably a pretty good spot to kind of reconsider, what to do in the near term, some risk management. Again, we're sending out an email to people that have that in our heat seeker program. So I wanted to show it to you here as well, so you can kind of see that gold mining stocks, which had a big run, and you may have noticed that gold mining stocks are up like 90% year to date now. So they're having a really big move. To me, they're getting a bit over their skis, coming back into that 2011 resistance area. So I'm a bit wary of chasing here. We've been long that stuff. The market rover nailed it, the trender nailed it, the momentum indicator, i.e., and so is that. Now, with Jeff is asking with silver and silver miners. I don't have as strong a view on silver and silver miners. So silver, and I bought silver futures, I think 1 week ago yesterday. Once again, I remain long. I don't know. I really don't have as much clarity there. What I do know is they're all bullish momentum. So from a momentum perspective, we're using our trender indicator. All that stuff is bullish momentum, right? So I can show you that quickly if I go over here to the other chart. If you just give me a quick second to find all of that. I just had to rearrange my computer here before. So give me just a second. I could show it to you here. So for example, for those of you guys that are using our trender momentum indicator, you will notice that the latest signal on momentum was a buy signal, and that became valid essentially on the 6th of August. And since then, silver's up another 8%. And then silver miners, whether you're using silver or silver junior miners, is sort of another question. But let's look at regular. What the hell is the ETF for that? Isn't it still? We may not have it on here, but silver miners, I can tell you, they are also very bullish momentum. I'm more concerned about the gold miners, and I'm going to show you why. The reason I'm most concerned about gold miners is because they've had the biggest run. So if you look at gold mining stocks, this is the year-to-date performance. You can see the gold miners are up. The GDX is up 90%, leaving pretty much almost everything else, behind. So I don't have a specific thing here on silver and silver miners, but I continue to like those in general. It doesn't mean they can't go down a little bit here, but that's kind of where I am on that. So hopefully that helps, folks. I have to run and get ready for our trade ops. Not trade ops. We're trade ops as well, but for our trade-a-thon, which starts in about 25 minutes or so. If you signed up for trade ops and you don't for trade-a-thon and you don't have a login yet, please make sure you reach out to our staff. They will gladly help you. But you should have all received an email with the link to see you. To be over there. And again, if you're a Trade Ops member, we'll be in the chat room as well, of course, today. See what happens. I'll leave you with this. I wouldn't be surprised to see quite a bit of choppy price action over the next week or two. Yesterday was a bit of a selling pressure. Today you can see with the Google news from last night, it's right back up. I wouldn't be surprised if this continues for a number of days here. On Friday we have the jobs report, so that might be something, but I think it's going to be a little bit choppy here before we may see more meaningful selling pressure, or we're right back up. So it's a critical month, the month of September, which is exactly why we want to be on top of it and help everyone navigate these waters as we're doing so ourselves. So see you guys on the inside and back here tomorrow morning at 9 o'clock Eastern, 6 a.m. Pacific. Thanks for joining. And again, please make sure you subscribe to the channel. It's totally free, and give us a thumbs up. Appreciate it. See you guys tomorrow.